Now, about the debt issue. Let's listen to a gardener's story. Here are two gardens, one overgrown with weeds, where the gardener frantically pulls them out while constantly complaining. The other garden is vibrant with colorful flowers. The gardener works effortlessly and joyfully, leisurely humming tunes under the tree all day. Passersby became curious and asked the relaxed gardener for advice. Hey, what's your secret to weed removal? The gardener said. At first, I was exhausted too. I noticed weeds kept growing back shortly after I cleared them. Later, I found flowers that grow faster than these weeds. They quickly overshadowed the weeds. Where flowers grow, weeds naturally disappear. Think about it. Isn't debt just like those weeds in the garden? Schaefer says defeating debt requires learning. The gardener's wisdom: don't fight it directly, but find those faster growing flowers. This is step 2 on the path to financial freedom. Increase your income. Schaefer divides readers into two categories: salaried workers and self-employed individuals, including freelancers, small business owners, and company operators. He offers different strategies from a financial expert's perspective. First, for salaried workers, if you do what everyone else does, or perform similarly to others, you can't expect significantly different results. It's like trying to sell generic products in the market. Can you command premium prices? You can only compete on price and quality. Do you want to be someone who's merely affordable and decent? Of course not. So what's the solution? The best method is to become an expert. Some friends make this mistake. They coast through their main job, but enthusiastically study various financial tricks. Schaefer strongly opposes this approach. The reason is simple. Your main job consumes most of your time. If it doesn't generate maximum returns, your wealth efficiency becomes low. Putting the cart before the horse, becoming an expert maximizes your earnings per working hour. Schaefer developed a thinking technique I call the 4-quadrant analysis. It helps find breakthroughs for rapid expert growth. Take blank paper, draw horizontal and vertical lines to create 4 quadrants. Label them: products, knowledge, services, ideas. These 4 words represent 4 types of work value. Work means providing value to clients. Deliver the best value, and you'll become an expert. So ask yourself, what can you provide for your clients? Is it products, knowledge, services, or creative ideas? For example, if you're a software developer, you provide products. Consultants, engineers, trainers provide knowledge. Advertising planners or interior designers offer creative ideas. You can definitely identify at least one of these 4 areas as your growth breakthrough point. Then think from the client's perspective. What are my strengths? How can I best meet client needs? How do I reach that level of expertise? Break it down into phases and create a practical plan. Spend 10 minutes brainstorming. Write down all ideas. This becomes your action plan for improvement. With consistent updates, you'll become an expert within 2 years. At that point, doubling your income becomes an achievable goal. If you're self-employed or running a small business with unstable income. During high earning months, you might think, I deserve rewards and increased spending. Then, during low-income periods, you borrow to maintain lifestyle and fall into debt. New entrepreneurs often lose financial control this way. Schaefer's solution. Pay yourself a fixed salary with consistent monthly expenses. Determine the amount based on your minimum monthly revenue. Example: if monthly revenue is 100,000 yuan, deduct 60,000 for operations and reserves. Amount 20,000 as fixed salary to a dedicated account for daily expenses. This fixed salary concept might sound unnecessary, but it's crucial for financial discipline. There's another crucial principle here. It's not just about financial discipline, but clearly separating company income from personal wealth. Many self-employed individuals pour all earnings back into their business, especially new entrepreneurs, while total dedication is admirable. This carries significant risks. If you think carefully about it, you end up with no personal assets. Your well-being entirely depends on the company's success. Schaefer's seen countless cases. Some rebound quickly after failure, while others struggle financially for years. Why? The difference lies in whether personal wealth was established outside the company. So, what if you really want to invest heavily in your business? The smart choice is using OPM. Other people's money relying solely on personal investment is primitive business practice. If needing major investment, create business plans to secure funding. Get as much loans as possible. This approach has been adopted by most entrepreneurs following Schaefer's advice. Crucially, Schaefer adamantly opposes personal loans but approves business loans, a key distinction. He recommends self-employed individuals withdraw company funds to reinvest personally. The ultimate goal: building personal wealth independent from your business. Given small businesses' low survival rates and common multiple failures before success, one failure shouldn't ruin you for years. Schaefer considers this financial strategy essential for smart entrepreneurs. When you successfully increase income as professional or entrepreneur, you complete step 2 towards financial freedom. But income doesn't equal wealth. So far, you've earned money through work. Financial freedom needs 2 pillars. You've built one income. Now need the other, making money work for you. This leads to step 3, putting your money to work. Schaefer has a famous saying, start saving early. He studied Europe's and America's wealthiest, like Siemens, Porsche founders, and Warren Buffett, all botitized saving early in their careers. Young friends living with parents, this is your golden saving opportunity. Seize it. Start saving now, the more the better. Time waits for no one.
Some say saving occasionally is easy, but monthly. Impossible. Any solutions?
Schaefer's answer: the 10% goose strategy, save 10% monthly, enough to matter but won't make you miserable. Spending 100% vs 90% feels similar, but the latter builds financial freedom. Why without savings money never works for you? What if you lose income? Statistics show most need 6-12 months emergency funds. Your GOES account provides this safety. But saving alone isn't enough. Your money needs to grow. Inflation is savings' enemy. At 4% inflation, money loses half value in 17 years. At 8% inflation, half value gone in 8 years, savings must outpace inflation. When savings reach critical mass, don't leave them idle in banks. Schaefer advises investing in physical assets like real estate or stocks, particularly recommends stocks. He believes stock investment is the best way to make money work, letting you benefit from national and social development. National economic development relies on millions of enterprises. The best are mostly listed companies. Investing in stocks means investing in society's top-performing companies. Listed companies outperform average profitability. Naturally, where smart money goes. According to 2017 Hurun report, China had 1.86 million high net worth families, 55% entrepreneurs, 15% property investors, 10% professional stock traders. Compared to starting businesses or property investment, stocks have lower entry barriers. You can start small, impossible with 50,000 yuan property investment, but feasible in stocks. Even 10,000 yuan works, need cash, sell stocks instantly. Best liquidity among assets. 2 fundamental stock principles. First, long-term investing. Day trading brings volatile risks. Might get rich quick or lose faster. Not recommended. Schaefer suggests buying industry leaders' stocks for long-term value growth. As society progresses, long-term industry leaders statistically offer highest returns. Second principle, diversification. Don't put all eggs in one basket. Even if some stocks underperform, others compensate, controlling overall risk. Stock investing itself requires specialized knowledge. 2 principles alone can't guarantee success. You need dedicated study.
Some friends say, "Hey, Schaffer, I don't have time. Here's an alternative solution: systematic fund investing."
Regularly invest fixed amounts in funds. Essentially, you're letting professional fund managers handle stock trading for you. In stock markets, you don't need expertise. Leverage professionals' skills instead. Research funds' historical returns. Find managers with consistent annual profits to grow your money. Crucially, fund companies follow diversification principles, never concentrate on few stocks. They don't engage in frequent speculative trading either. Thus, fund investing naturally follows both stock principles, long-term holding and diversification. Why? Fixed amount investing. First, it's wealth accumulation, like saving, but directed to stock markets. Second, it employs smart dollar cost, averaging, buying fixed amounts, not shares, regularly. Example, if a fund costs $1 per share, invest $1,000 monthly. If price drops to 90 cents, you buy 1,111 shares that month. If price rises to $1.10 later, same $1,000 buys 909 shares. This automatically buys more when prices are low. Lower average costs mean higher potential returns. Clever investors might already think of variations. Can I combine systematic investing with diversification? For example, spreading investments across multiple funds. Exactly. You can systematically invest in 2 different funds simultaneously, making your money work safer and more automatically. Of course, there are other strategies too. When you actively think this way, you unconsciously expand your financial control and capabilities. These are the essence of financial freedom's second phase. 3 steps. First, escape consumer debt using 50/50s principle. Second, increase your income. For employees, become an expert using 4-quadrant analysis to create action plans. For self-employed, use OPM while building personal wealth outside your company. Third, make money work through 10% goose strategy for initial savings. Then buy your first stock, following 2 principles. Short on time, try simple fund investments. Schaefer says financial freedom is achievable for everyone. Build positive money values and take financial responsibility. Follow 3 steps. Your yesterday shapes today. Today builds tomorrow. Start now. That concludes our book interpretation. Keynotes are in the audio.